Hello, I'm Hunsley from Livewire Markets and welcome to our Fund and Focus series. Joining me today is Hamish Chamberlain, the Head of Global Sustainable Equities and a Portfolio Manager at Janus Henderson Investors, and we're talking about the Janus Henderson Global Sustainable Equity Active ETF and the strategy that goes with it. Hamish, welcome, great to see you.
Pleasure to be here, Hans.
So, walk me through these key features. What do investors need to know about the Global Sustainable Equity Active strategy?
So I'll start with the mission and then talk about some of the key features. And our mission is very simple. We want to deliver better performance than a standard or classical global equity peer group. So our benchmark has always been the MSCI World, and our mission is to outperform that benchmark. And what we want to do is we want to invest in leading companies from around the world that are going to grow and compound our investors' wealth. So the portfolio itself, or the strategy itself, it's a high conviction one. So we're looking at quite a concentrated portfolio of around 50 positions. Very high active share, so it's very differentiated against the MSCI World Index. Of course, we've got some familiar names in there that I'll talk about later, but also some different names that people may not be so familiar with. But the common characteristic across all of our holdings is that they are all selected for their compounding characteristics. And so what we want to do is grow and compound our investors' wealth over time.
Okay, excellent. We'll talk about those names a little later. So it's one thing for investors to consider global equities, but why do you think investors should consider sustainability-linked global equities specifically?
The way that we look at sustainable investing, first and foremost, is that it's all about identifying long-term secular trends, secular growth trends. In a nutshell, we believe that the transition to a more sustainable global economy is one of the biggest investment opportunities of our generation. And so the way that we look at, so why do we think sustainability is important? It's to find the best opportunities out there, the companies that are most likely to have superior growth prospects and deliver superior returns for our investors.
Okay. What do I find that's interesting about just kind of the sustainability theme in general? There's been a lot of heat that's come out of that market. There's a lot of hype that's come out of that market. But is that necessarily a bad thing for your strategy?
So I think it's actually a good thing for our strategy. I think it's interesting how you can sort of look at that. Is it good or a bad thing? Ultimately, you could argue that it's a really good thing when the sector's hot and there's loads of capital pouring into it, because then you could argue that that's creating more change and is accelerating that transition to a sustainable global economy. However, the way that we look at it is we believe that the return prospects are better when there isn't too much heat in the market. So certainly we've seen that heat come out over the last few years. And we believe that valuations are much more attractive today than they were a few years ago. And we think that's, and ultimately we want to get our investors in at attractive levels.
Yeah, no, absolutely. So I know you've already alluded to this, but I'm wondering if you could maybe do a little bit more expanding. I guess, what makes your approach specifically to sustainability investing different from other firms?
So I think one of the key differences that I would highlight is that we've been doing this a really long time. So the strategy was first launched in the UK market over 30 years ago. So we celebrated our 30-year anniversary in 2021. I've been managing this strategy now for more than 10 years. 12 years ago I started managing this strategy. And one of the things that we've developed over the last decade is an incredibly rigorous and repeatable investment process that's focused on positive, thematic characteristics. We've got very clear exclusionary criteria and very well-defined fundamental process with disciplined financial analysis. And that's delivered very consistent investment performance.
Okay, so let's draw on your experience. Let's draw on the strategy that's been developed over all that time. Where are you seeing the greatest opportunities and the biggest pitfalls in today's market?
So one of the key areas that we're really interested in is artificial intelligence. And we do have exposure to companies such as Microsoft and Nvidia. Those are two of our larger holdings and have been successful positions for us. We've been invested in those companies for a long time, I should highlight. So we do have the ability, or sort of we do have a track record of identifying exciting companies well before they start performing. Artificial intelligence, I think a lot of people have been talking about it. We still see enormous amounts of upside there. We think this is going to be a decade-long plus growth opportunity, and the growth really is spectacular. Both Microsoft and Nvidia are growing their revenues at incredibly high rates. Microsoft's just reported a quarter of 17% overall revenue growth, and this is on a mature company. These are very large numbers. Nvidia, it's been growing its revenues at greater than 100%. However, rather than talk about AI, I think another interesting area where we see a lot of opportunity is in electrification. And one of the things that, or some of the things that we've been talking about with AI is the increase in energy demand. Now, we're very focused on companies that can enhance the energy efficiency or power efficiency of computing. And we're seeing a lot of demand for investment in the grid, in companies that provide efficiency solutions, and low voltage and medium voltage solutions. So companies that fall into that for us, we've got Schneider Electric, which is one of the leading global low and medium voltage electrical companies. We've also got an investment in a cable company, Prysmian, which is making sort of high voltage cables, which can sort of improve the structure of the grid. And so we're seeing a lot more investment in that area. Okay,
so those are some of those opportunities. Can I just press you if there are any pitfalls you think in the universe that you look at in today's market? Are there any pitfalls? Where are the biggest pitfalls?
So an area of weakness at the moment is in the electric vehicle market. After a lot of excitement over the last few years, we're definitely seeing a lull in the growth rates. And some of the large automotive companies have announced that they're pulling back somewhat from their electric car programs. Now, we haven't got any direct investments in any automotive companies. The way that we've been exposing ourselves to the electrification of vehicle trend, which we still see as a very powerful long-term secular trend, is we've been investing in the supply chain. And the key thing about that is that the electrification of vehicles is a broader trend. So you're obviously getting combustion engine vehicles going towards hybrids, to plug-in hybrids, to electric vehicles, and the suppliers are playing in all of these areas. So even if pure electric vehicles are going through a bit of a lull, we're still seeing good demand in the hybrid and plug-in hybrid end markets.
Okay, so obviously people can access this ETF on the ASX, but speaking as the person who actually manages the strategy, how can investors use your strategy in a diversified portfolio?
One of the things that we're very careful to do in our strategy is to manage our risk profile appropriately. So I mentioned before that we've got a very high active share, 90% compared to the MSCI World Index. However, we do have very well balanced risk characteristics. So our maximum tracking error is around 6%, and that's helped us to deliver very consistent performance over time. So while we do have very pronounced, I'd say, or sort of consistent style attributes, we do have consistent tilts towards growth and quality. We like to think of our strategies as having also core characteristics, and it can be used as sort of a large portion, we believe, of a core portfolio as well.
And there you have it, a taster to the Janus Henderson Global Sustainable Equity Strategy. Hamish, thanks for taking us through it. Really good to have you with us.
Thank you very much, Hans.
And thank you for joining us. If you enjoyed that interview, you can subscribe to the Livewire and Market Index websites, as well as our YouTube channel, where you can discover more funds in focus. Thanks for watching.